Retail group Foschini has reported a 3.1% increase in first half headline earnings per share. That's at 413 cents. Group turnover up 9% to 6.7 billion rand. Now Foschini expects to have around 300 stores outside South Africa by 2018. The retail group will open a further 92 stores in the second half of the year. Earlier I spoke to Doug Murray, the CEO of Foschini. Let's take a look.
So there's been quite a significant change in the last 12 months, and I think everybody remembers about a year ago that the unsecured lending market the growth in that market anyway, came to a grinding halt. And that's clearly shifted the credits and cash position here. You know, what is encouraging for us is that we still have very strong cash growth at 12.7%. But with the consumer is clearly stressed, and we have obviously taken action to reduce the risk from a credit point of view. With that, we are obviously going to have a much lower accept rate on the number of accounts that we open. And we obviously are looking at a lot more information regarding the consumer's indebtedness, and that helps us make better credit decisions from a risk point of view. So this is something that we've anticipated. It's no surprise to us that our credit sales are at the level that they are at, because in a way we sort of curtail that level. What is good for us is the strong cash sales growth, because for the same period last year, we actually had in excess of 19% cash growth. So it's strong cash growth on cash growth from last year. Yeah. And it also indicates that several of our brands that we now have operate in the upper middle to upper sector, and that consumer is somewhat less stressed. So that's one of the reasons why we have, I think, stronger cash growth. And ultimately, it's all about how good the product is. Yep. So it's always encouraging if you have cash growth, because that consumer can spend that money anywhere. They're not driven into you by only having your credit card. So we're happy with the cash sales growth, and we think we understand the level of credit turnover that we've got.
Let's talk about your product offering, because you mentioned the higher end brands that are doing well right now, and of course it's in this space that we've started to see new entrants, global fashion retailers coming to South Africa. And of course we know in the past it was generally the apparel industry considered a push model, but it's highly competitive now. You've got all these new entrants coming into the market, and of course it forces you to listen to the customer. I mean, your thoughts right now on how responsive Foschini is towards customer needs, and your thoughts specifically on the fast fashion and how you're looking to change your model, but potentially to respond more quickly to customer needs.
Well, across the whole of the TFG, each of our trading divisions is looking at a much faster, quick response model. It's the way I think international retailing has been moving for some time, and I don't think we are any different in that regard. We're obviously trying to get a much larger percentage of our products that go in a shorter period of time. If you can do that, then you reduce the risk. You're more likely to get the product right. And that's it's been a key driver of this group for several years now. And we certainly seem to be making some good advances in that regard, though I think there's still a long way to go. With regard to the international retailers coming in, they come in, but they only have a handful of stores at the moment. I think one must bear in mind that any of these retailers that come from the northern hemisphere into the southern hemisphere, it's counter-seasonal, and it's not easy for the northern hemisphere retailers to come into the southern hemisphere. And as I say, we've seen a number of them, but with few stores at this stage. But that's the way of the world. Competition is good in retail, and it ensures that everybody continues to up the game.